Hello traders, welcome to another recap of our analysis. Today, right now, it's March 23rd, Thursday, right at London opens, pre-London opens actually, 3 o'clock a.m. And let's get into it. Well, first announcement is that I'm gonna be taking time off in next month, starting from April. So gonna be away, not going to do any more analysis during the month. So be back in May. That's the first thing. I might still occasionally write some analysis updates here or there, but if you have been learning and wanting to just keep going, my best suggestion is you can go on Forex Live, just to read their session wrap. That's very good. That's where I read it every day actually for myself. You can also go on babypeeps.com. There's a few blogs that's pretty nice. They also do some session wrap up. So it's just a good way for you to basically learn the fundamentals of the market, what's going on, what had happened. Even if you're a technical trader and you just want to get a quick picture updates, I found Forex Live, the session wrap up, I'm going to pull up for you, is really one of the best source for myself. So if you go on forexlive.com/session wraps right here, they have all these session wrap up. So it's really a quick way. Now you could read the individual hyperlink, but for me, I also just like to go down here and read, this sort of just the article of what had happened in the previous 8 hours of session. And this American Forex news wrap up. You have European. So basically, it's from Europe, US, Asian, Europe, US, Asian. Another thing you can do is I go to babypeeps.com blogs, Piponomics. This is nice. Pinoculars. They also have a session wrap. Just right here. That's the link. So these are pretty good source for me if I want to just get a quick updates. Now, of course, if I want to get a more thorough updates, I will go to Wall Street Journal. I am a member of it, so those where I go if I want to get more updates. So gonna be away April. If you want to keep learning fundamentals, that's a perfect way to do it. In these few websites are very, very good. Other than that, it's March, almost the end of March. I normally do monthly, weekly, and also do a quarterly sort of recap for myself, see what had happened. So first thing first is that in these 3 months certainly learned a lot of things. But aside from that, I would encourage everyone to do it as well. Definitely you have a trading journal. That's very helpful and beneficial for your trading journey. But also having a habit of doing this kind of recap. If you're busy or if you're not really active as a day trader, you can just do weekly, monthly, and quarterly, just to see how you're doing, not only your performance, but why you make money, why you lose money, and what are you going to do about it, what's your plan, things like that. So first quarter of 2017, definitely learned a lot. As I mentioned, fundamental trading is still very new to me. I'm in a drawdown right now, and for me, definitely losing is part of the game, but the most important thing is you gotta know why you are losing, or even if you're winning, don't get over yourself. You gotta know why you are winning. So really understand the reason of your performance or the result is very, very important. So for me, of course, I did learn a few things about my performance, or what works for me, what doesn't work for me. And I think April, it's great timing. I'm gonna take off. Back in May, maybe I would do some change. I think the biggest thing is that I find that doing this kind of session and intraday trades are very good for me. Actually, I get more used to it. I did feel that getting better at it. But because of that, I think my swing trade has suffered a lot. And the reason is because it's hard for me to, zoom in the market session by session, where I'm in front of the screen for 8 hours. and then take off and come back a couple hours to do a swing trade. It's in a daily base. I think the time frame is just too close to each other. So I think the change that I'll make after May is probably I will have a session trade focus on more like a weekly base, where I really focus on the fundamental, but also only enter in a weekly base to sort of force myself to really have a longer time frame, taking a more zoom out point of view for myself for a swing trade perspective. And intraday trade, I am just still going to keep doing it, and I think that one has been picking up quite well, and that's really where I have more confidence nowadays. Swing trade, not so much, but I think it's really I jeopardize myself in this 2 time frame. So for me, I think I'll probably focus more on a weekly perspective, and that's also a better way to manage my time, I think, because if I wrap up after a session, then really I just don't want to be in the market anymore. I don't want to be there. Usually I do daily at New York time close, but right now it just doesn't really make sense for me to trade scalping for 2 sessions and then leave for a couple hours and back to see a swing. It's just not working out for me, to be honest. So those are one of the main things I learned in this quarter, but a lot of other things just keep learning. And again, I will encourage you to have this habit, having a journal for yourself, doing sort of a recap. It's very helpful for your trading journey. Okay, so what had happened during these few days? Let's pull up the calendar first. So our last analysis was on the 20th. We talked about the monetary policy, and I was saying that we will see how the CPI react. I was saying that I'm gonna trade it either way. If we have a better CPI, it's positive for British pound. If we have a negative CPI, it's negative. And the CPI year on year came out very positive, 2.3. Now, not only this is positive than the expected and previous, this is really right now above the BOE's target. So if you remember last week during the Bank of England decision, one member dissent become quite hawkish. And the reason is because they find the inflation, if we raise up too sharply, they will have to raise the interest rate. So right now, it does look like the fundamental data does support the case. If the inflation keep going like this, Bank of England will inevitably have to raise the interest rate. So that will, of course, increase the value of British pound. And it already reflects in the market, as you see, cable standing above 1.25 right now. And of course, the risk for UK is the Brexit bill, the Article of 50, which is going to be triggered on March 29th. Those are the main concern. But once those are removed, then if you remove the political unstableness and back to the economy side, if you're just looking at the fundamental data, then it does support the case for Bank of England to tighten up the interest rate. That's something to keep in mind. And then core retail from Canada also way much better than expected. I actually trade these 2 events myself, scalping base, which I'll go over later on. So this is better than expected. And then GDT price also better than last time from New Zealand. And yesterday, really didn't have much market news aside from the crude oil inventory, another large build-up. So this really completely erased the oil market recovery, because I think during Tuesday we do have rumors that OPEC is going to extend its output cut, and those are very good news for the oil market. However, as I kept mentioning, right now the oil market is too battlefield. The OPEC members are trying to reduce the supply in order to raise the price, but the crude oil producers in US are just keep pumping out the oil. So that's what happened, and the oil right now, the market is not doing well. We are really solid below $50 per barrel, really around 47, 48 area. RBNZ come out with official cash rate as expected on hold. The statement didn't really provide too much insight. They are still neutral to dovish. They're still thinking that the currency is too high and that's going to jeopardize from their economy and recovery, things like that. So still, from central bank's point of view, I will say it's still a quite dovish RBNZ. Of course, it's not as dovish as last time, but it's definitely not as positive as their neighbor Australia. And another thing, if you follow the news, of course, there's a terrorist attack in London, outside the Parliament. Market actually didn't react, and I mentioned, all through last year, is that people tend to get immune from terrorist attacks nowadays. So back then, I remember when the airport got attacked in Belgium, then in Brussels, it was a huge buying into Japanese yen. And nowadays, not so much, to be honest with you. So really, Japanese yen safe haven really react way much better to the economy or the politics more than the terrorist. So it's of course it's a tragedy, not a good incident, but does not really play too much into the financial market. Right now, people are really looking out for tomorrow. We're gonna vote for Trump Care, which is the new healthcare bill. We'll see how that one goes, and of course, that's going to be a effect in the U.S. economy. And let's get into it, and I can explain more to what happened. So let's take a look at the daily chart first, because that's more clear. So dollar yen, as you see, consecutive of dropping. Now, of course, this blue line is the 100-day moving average. It did get broken down solidly. So what happened in these past few days is a huge risk of sentiment to help the safe haven currency. Now, different people saying a different reason. This risk of sentiment is not really new, right? All the way from last week when we have a dovish FOMC, and then all the way from this week. During the weekdays, at the beginning, we did have some nice sentiment from the French election debate, which it was the win for Macron, which is better for Euro. And the market did perform well, but all of a sudden, a risk of sentiment just kicks in, and different explanations. Some people say it's a market start doubting about Trump's plan. As right now, we keep saying the tax cut plan is going to be delayed, the so-called phenomenal tax cut plan, and the healthcare bill might not be passed because he seems to losing some support from his own party, Republicans. Those are all possibility, but nevertheless, it is what it is. Market is always going to react ups and down to the sentiment, and if you realize a lot of economists were trying to find a reason behind the movement. But you gotta understand, it's too late as a trader, right? If you find a reason, you're already in a trade, maybe you already stop out. So you just have to know there's something you have to be fine with it. Sometimes you will get whipsaw, you will get stop out because the sentiment just suddenly shift, and those are not really predictable for you. So if you're trading sentiment, I will really say, you better to trade it in an intraday scalping perspective, where you have more control. If you're doing a daily perspective, you really have to ignore that sentiment. No, that's certainly what happened to me. I'm doing it daily and got caught up in the sentiment, and I just realized again, like I just said in my opening statement, perhaps daily is still too short-sighted for me, especially right now. If I'm already doing a scalping, it's maybe make more sense for me to do a weekly, so that way I have really more differences in these two approach to the market. But if you want to do daily perspective, I'm just not really good at it, to be honest. Right now, I find out I did get caught up in a sentiment. Some trades work out for me, some goes against me. Not really because of the result, it's more because my own confidence. Just feel like not really having my finger on the pulse in the market. So nevertheless, that's what happened to dollar yen. Actually, let me just go over all the pairs, and then we can talk about it. Oh well, first thing first, go over my intraday trade. Right? So I did took a Cayenne trade. upon better retail sale actually on March 21st. So this is where I'm getting actually, right here at this, really just at this candle. So of course, if you can tell, it dropped at the end of the day, and I actually got out about 10-15 pips scalping. So just to share it, just because I'm happy I didn't get caught up in this trade. And the reason I get out, very simple. You see there's a moving average right here. There is a blue line, hourly, 4-hourly resistance. There's a white line, weekly resistance. So for me, there's a weekly resistance, 4-hour daily resistance. This is the top of a daily pivot. So another resistance, 100-day moving average. So many technical reasons for me to just, if I want to get profit, just get profit. Now, fundamentally, I was never bullish about Canadian dollar because the worst performance in the oil market. So I want to share it just because sometimes you win by not doing the trade or not staying the trade, and those are the things you have to really recognize it. So winning not necessarily just comes from winning as a winning. Sometimes if you don't take a losing trade, that's a winning. If you got out of a losing trade before it drop more, that's also a winning for you. So you have to understand. Now, vice versa, if you trade randomly but you win, that's not a winning trade. That's just you're lucky. If you trade without a plan, or you just in and out without any reason or any strategy, you just it's sort of like, oh, I'm feel lucky right now, and you did somehow get lucky, you have to be very, very careful, because those are the bad habits that you're building up for yourself. You might get lucky 1 or 2 times, but no one stay lucky for a long time in the financial market. Eventually you're gonna get caught up. So understand there's fine differences, fine line between a true winning and true losing. If you follow the trade, everything works out according to your plan, but you lose for whatever reason, not unpredictable reason, then it's still fine. That's part of the game. So something I shared just because I got out right at the top, right up before it crashed. So that's a good intraday trade for me. Also took positive CPI, Pound Yen. Again, it is the same scenario. Got in, got out at this area, scalping again 7-10 pips only. Happy because it tanked at the end of the day. So for me, that's why I like it. Again, I got out because of high daily pivot, 140.50 weekly resistance, and a round number, whole number for me. So just got out to be safe, and that's the case. So 2 intraday trade of the week. That's pretty much what I had so far. Scalping wise, getting quite, I like it, for myself. Daily trade, not so much, honestly. As I mentioned, I find I get caught up by this sentiment, and just I don't really have a bigger perspective if I'm still trading. If I zoom out to weekly, to be honest with you, if you look at dollar yen, if I look at weekly, if all the fundamentals stay the same, all right. If I say, hey, let me get in because US dollar fundamentally is stronger than Japanese yen, regardless of the sentiment, I like to get in. And you have this green candle right here, I would probably get in at 113, same thing. So it's not so much about my entry, but I will definitely place my stop loss maybe way below 110, because that's below 2 moving average, and it's a whole number. So for me, just a much better area. But that you can only see that if you zoom out in a weekly perspective. Same as euro dollar. If you look at the weekly chart, you say you want to short it, then maybe if you say I want to short it back then, with this red candle, I will still do it, but again, I will probably put my stop loss way above this red, above this 15 moving average, things like that. So it's just for myself to maybe have a even more elaborate picture. But nevertheless, let's just finish up with the existing trade I have. I'm not taking any more swing trade anymore, because I'm going to wrap up in a week or so. So not looking to do any swing trade. But let's take a look at my existing trade. So Aussie Swiss, I'm still in this trade, still basically stuck in this zone, and really I still think fundamentally, of course, Aussie Swiss should keep going up, but again, this is a nice area, but right now I don't know what's going to happen, to be honest, because we tend to have a very strong sentiment nowadays, risk on, risk off. So let's take a look at weekly. If I were doing weekly, I probably will getting at exactly same point with this green candle, which is fine, but stop loss will definitely way below, right below here. Right now my stop loss is actually quite close to 75.35. So if I were, so really just exit, and I find out exit is really where you make money. So you gotta be careful about where you make money. I would probably also just get out or just to break even upon this 200-day moving average, because this is going to be very significant. So it's just different approach, I guess, if you're looking in a weekly perspective. If you're looking in a weekly perspective, Aussie Swiss is still relatively in a downtrend. So things like that will maybe be a caution. Aussie Yen, if you're looking in a weekly perspective, it does try to break above this 200-day moving average. It does have a quite strong rebound at the beginning of this year. So all these are pretty nice fundamental reason to get in. But this is going to be a very strong resistance here. So we'll see what happens. Let's back to a daily. So of course we got in 86, went up, went down, and we are still here right now, touching blue line 100-day moving average. Still a very clear daily uptrend. We will see how this thing holds up. In these 2 days, of course, risk of sentiment doesn't really have much reason behind it, to be honest. It doesn't have a huge thing like election or things like that. So it might just be a market react to whatever happens. So we'll see what happens. Aussie Yen, Aussie Swiss. Another one, cable, we got stop out at break even, unfortunately. Now, I was saying I'm tempting at 25. Right now, it's different. You see, the level is still the same, but it's different reason. I'm not really going to get in unless I see some reversal signal, if you're doing a daily perspective. And the reason is because back then, there was a very clear neutral Bank of England. They were not saying they're gonna hike the interest rate or a cut interest rate. So back then it was a neutral Bank of England. Back then we still have a strong pre-exit sentiment. This thing dropped, and right now we still have a very negative sentiment for pre-exit, for triggering Article 50. But Bank of England had become much more hawkish. So if you understand my priority to look at the fundamental picture, it's always the central bank is always the number one thing. But right now, since the central bank had changed, I might not, I don't like this kind of trade anymore. So right now, Bank of England had become quite strong. I still think 25 is a very strong resistant area, but I really want to see some sort of a candlestick signal. Now, if you're looking at weekly, it's still a very clear downtrend, still a very nice area to sell. But if you're looking at weekly, then perhaps 27 will be a much stronger, because now you have this double, 1, 2, maybe a triple top already. And we are approaching 25 exponential moving average. So we will see how this thing works out. And we'll see what happens. Another one I have, New Zealand dollar, is the one I shorted, and at 7000 we are still around this area. I still think this this resistance are nice, but we will see how this is pretty much going to a sideways actually. I also got in a dollar CAD at 30 upon this nice kangaroo tail fill me in. again, if the oil market continue to be bearish, that will be a nice element for dollar CAD. Euro yen I also got in at 120, or actually right here. So I got in at this green candle, and really was nice at March 21st before it closed, because everything you see actually went higher. It was a really strong green candle, and then suddenly we have a risk of sentiment. So we will see how strong the sentiment, risk of sentiment will be. Euro New Z I got in at 53. Now this is a bit of course against the fundamentals, and well, it does not against the fundamentals. Sorry, I've rephrased from that, because fundamental wise, European data are not so worthwhile than New Zealand. What against is the interest rate, the interest rate of the currency. Because if you're holding this trade, you're actually paying interest, because New Zealand has a much higher spread than Euro. So that's something, if you're doing weekly, perhaps not, well, I shouldn't say, since we are traders, not investors, but it's just a risk that you have to take. You have to bear in mind that you are paying for the interest. So normally I don't like to do it. Normally I really like, especially for swing perspective, fundamental perspective, I really like to buy the currency that has a much higher interest, or at least not much differences. But for Euro and New Zealand, there's a big differences. So the reason I buy it, of course, I have a very strong ECB and very dovish RBNZ. Data-wise, European data had picked up quite well, versus New Zealand data were not so much, and those are two very good reasons. Euro dollar is another trade. We were getting at 1.07. It is nice moving day, 100-day moving average. Unfortunately, a dovish central bank versus a win, the Dutch election win for the pro-Euro candidate. All of things really fuel up the Euro sentiment right now. So we will see how the 200-day moving average and 1.0850 holds up. It should be a strong resistance. We'll see how it holds up here. And that's pretty much it. Only the trade I have right now. Again, this is something I really working on for myself. So fundamentally, of course, all the reasons to take this trade are still in check. Perhaps again in check, it's true, but you perhaps in at the wrong timing. So that's why I think might be the problem for me to taking a trade in fundamental base, but got in too early. You gotta live in bigger room if that's the case. Because if you look at Euro dollar, for example, I still think it's looking to the downside, just because Federal Reserve is going to raise interest rate 2 to 3 times. ECB, yes, they are going to raise interest rate too, but only until they finish the QE first. So you just look at the speed of the recovery for these two countries, or the way they approach the market is very different. And politically speaking, or sentimentally speaking, the biggest risk for US is Donald Trump himself. Biggest risk for Euro is another 2 major elections. So I still think there's a more downside risk for Euro. Economic wise, US is going to pick up well. I still think the fundamental bias is very strong. However, it doesn't mean Euro dollar will not go up in the short term, and that's where the timing is very, very important. If you're looking at a weekly perspective, it's still a very clear downtrend for Euro, but perhaps you will only getting at 0.8 actually, if you're looking at a perspective of a weekly chart. So that's really where the differences is, I guess. Let me close this. So that's really where the difference is. Maybe you are only interested in, so you pretty much ignore all this year, and you could try it first, but maybe you feel like it's too close to this first moving average. You maybe want a higher reversal, higher retracement before you get in. So that's just a different approach and different perspective. So that's really it for me. I mean, not really looking to take any more trade, not really having any other option, other setup, fundamentally speaking. So I'm not really. But you know what? Let's still take a look at the currency then. Why not? Just give me 1 second. Okay. So let's look at Euro pound real quickly. Does look like it's keep going up, and again, let me delete this line. I think it kind of distracted. So still think it's gonna hold up well. So for Euro and pound, it's really I couldn't really tell which one is gonna be stronger. They both really are more suitable for intraday trading, for my perspective. The reason is because British pound has a positive sentiment from BOE, negative sentiment from triggered Article 50. Euro has a positive sentiment for ECB, but a negative sentiment from the upcoming election. Euro Swiss, also not something you're looking to trade. Euro dollar, it does look like it's gonna test this very strong resistance. If we did break above, it's an upside movement for Euro dollar. Euro Aussie, does look like it's gonna taste 1.4150. And Euro CAD, see, Euro it's still very, very strong, sentimentally speaking. Now Euro Yen is not the case, but that's pretty much all the currency with Japanese yen in these 2 days. Cable. Actually, let me delete this line. Cable. Pound Aussie also went up, trying to taste in this 1.64 area. 1.64 area. Let me again delete this line. Pound CAD. See, British pound is also quite strong. I would really say the biggest loser right now is Canadian dollar and New Zealand dollar. And Canadian dollar really suffers from the oil market sentiment. So that's really something, regardless of good retail or good internal economic data, is still not going to boost the Canadian dollar up. Swiss franc, Japanese yen. So that's something you have to remember, that each currency react differently, and the reason is because each country has different economic components. So sometimes, a good retail sale might mean different things for US, Australia, or Canada. Vice versa, a good GDP might mean different things. So sometimes you see a piece of data, maybe it's a CPI, and it's a huge boost for one country, but it's not so much for the other country. And the reason is because, if you ask me who decide that, definitely the central bank. So for example, British pound had a strong sentiment, bullish sentiment, because they have a good CPI, and the reason is because the Bank of England, the central bank, had already mentioned that's the data they are going to look at, and they are going to possibly raise the interest rate. For Canadian, Bank of Canada will never say that retail sale is something that's very important for us. No, for Bank of Canada, it was the inflation, it was the export to US, and it was the oil industry, oil price in general. So that's why those are three important things you need to look at. For Japan, it's the inflation, it's the consumption. For US, it's the PCE, it's the CPI data, and it's the labor market, also is the wages. So for example, last NFP was a very good job numbers, but US dollar become very weak before the FOMC meeting, and some people were questioning why US dollar dropped in front of the good job data. The reason is because the central bank has come out say that they are going to look at the wages. So the wages are more important than the job data. So that's why the fundamental data has really no strength or goodness, weakness or strength over each other. It's really depending on what the central bank is looking at. And that's why I say if you trade fundamentally, the most important element to follow is the central bank's point of view. So definitely you have to follow the central bank. They are really the one who drives the currency market. Dollar Swiss also dropped, and let me delete this line. This one is out already. And dollar yen also really at a very low level right now. So same thing. And let's keep going. Aussie Swiss, same things. The one we are in right here. And we will see, if you're just looking with your bare eyes, it's that this is a very strong support zone, resistance zone. So we'll see if this one holds up well. Aussie dollar. Now Aussie dollar could not stand above 77, and that's significant. But we might just have a little bit retrace. We might keep going up. The thing about Aussie dollar is that they both are quite strong for me. So unless you have a very strong reason, a catalyst to get in, otherwise I tend to avoid taking these two strong thing. Now Aussie Newsy dropped, which is good because I still favor Aussie more than Newsy. We are overextended. The reason I say that is just because we are way above such a huge gap above the moving average. So we'll see if we can taste 1.08 would be a good area. 1.07 of course will be even better because then you have this kind of resistance. If you zoom out to look at weekly, then 1.0750 will be a very good place to get in, where you have a previous resistance support, 100-day moving average. And the thing you have to watch out is it does look like this 200-day moving average has been holding up very well. Couldn't break out March 2016, couldn't break out in July 2015. So if you zoom out even more, basically it has never been able to break above since 2013. So that's why it's a very strong moving average to pressure this trade. So if this week maybe you close it as a red candle, then you maybe depending on what happened fundamentally, I still wouldn't take it. But just technically speaking, this has been a strong resistance area. So if you wanna buy later at 1.0750, just maybe profit at here and watch out for this area. That's in the weekly perspective. So Aussie yen is the one we are in right now. We are in at 86. So we still want to see how this thing works out. We are touching this very strong moving average. So, and we are in a general pretty nice uptrend. If we zoom out to look at weekly, then it's exactly same picture. It touched 200-day moving average, couldn't break above it. And right now, 100-day moving average seems to be a strong support. So we will see how this week ends up to react to this support here. Let me close this line. Let's get back on our daily chart. And cash Swiss, not something I'm looking to do. Cash is really losing right now, same as CAD, and really oil market doesn't really not looking well right now. Of course, if OPEC does officially extend the output cut, will have some good momentum. But the problem is the shale producer. The problem is really the crude oil inventory builds up. If that thing keep going up, then the future path for oil market will be quite bearish. Newsy Swiss. Now Newsy still dropping versus most pairs. and that's really just tell you how strong the central bank is. If they decide to depreciate the currency, really you should not go against it. Look at New Zealand actually break below 200-day moving average. It's quite significant. So we'll see what happened to upcoming weeks. And again, Japanese yen and Swiss franc, definitely you have to watch out. The reasons because the upcoming elections in Europe, the Brexit bill, or even the Trump plans and policies, all these are very risky or uncertainty events for the market. And nowadays, whenever we have those kind of economic uncertainty, Japanese yen always got bought off largely. So be careful for that. Now, other than that, thanks for watching. I'll say I'll still try to come back, once or twice, maybe next week or this week before I takes off. But during the month, I would just say, first quarter really, no matter how it works out for you, definitely have a habit to do a journal and give yourself a review. And then, if you are interested to learn more, follow up Forex Live, Baby Pips, or even Wall Street Journal, Bloomberg, just, have a habit of reading this news once or twice a day or week. That's all good. Just get used to understand the fundamental side of the trades. So other than that, I will still doing intraday trade maybe until the end of this month. This session up, I don't have any major news to give you, so I don't wish know. The only thing I was looking to trade will be later on. We have the British pound retail sale right here. So retail sale will be something I'm looking to trade. Now, the reason is because retail have been very important GDP component for British pound. But moreover is that the reason the retail sale dropped in the last 2 months was because economists were expecting that right now the low depreciation of British pound had caused the goods become more expensive. When you buying goods, producers buy goods to sell, the goods become more expensive. So that's why the cost of goods become expensive, and the sales of goods have to become more expensive. So that defer people from buying, and that's not a good sign for the economy for sure. So that was the worry sign, and that was the point that Bank of England were saying that they might cut interest rate or raise interest. They might cut interest rate because if the consumption continue to decline, if the wages growth continue to decline, they cannot raise interest rate because they have to stimulate the market. So right now, if you can see, the expectation was quite high actually from the last time, negative 0.3. So if this is a miss, then of course it's going to be negative for British pound. The market right now already get over it's again more right now is already too excited. Basically, they were saying that okay, Bank of England is going to raise the interest rate. Let's buy British pound right now. But don't forget, if the retail sale is a flop, then that will make Bank of England harder to raise interest rate. So if that's the case, we should see some pullback for British pound to the downside. On the other hand, if the retail sale is good, then really Bank of England have more possibility to raise interest rate in their next few meetings, and that will be another buying for British pound. So that's the one I'm looking to trade later on. Other than that, unemployment claim, nothing to trade, but Yellen is going to speak at 8:45. So this is important. Maybe you can get some hint about the future path of US. Other than this, will be the Trump Care bill. Today is Thursday. Later on, is going to be passing or not passing in the Parliament. In the Congress of US. So we will see how that one works. If it does not pass, it's going to be negative for US dollar sentimentally, because that's really a doubt to Donald Trump as a president. And if that's the case, then all his other stimulus plan, infrastructure, tax cut, investor will start doubting whether he has a power to push those plans. If he doesn't, that means the US dollar maybe is not going to be that, or the economy itself is not going to be that bullish for upcoming years. That will be a negative sign for US economy and the US dollar. So those are things you can watch out for. Other than that, we have few Fed members speaks, but this is after Chairman Yellen. And Friday, some PMI, not the tier 1 data actually. Then the CPI again for Canada is tradable, but generally for Canadian dollar, if I'm buying, it's really just scalping for 10-20 pips. If I'm selling, you could hold in for a longer pips. So that's pretty much the intraday trade I'm looking out for today. Other than that, thanks for watching. I'll be back next time with another daily analysis. If you have any question, feel free to let me know. Thanks for watching. Bye bye.